All right, three things in 3 minutes. Let's get it. So imagine a soccer game with no referee. Players start pushing the limits, fouls get ignored. Eventually, someone gets hurt. This is exactly what's happening in the mortgage world right now. The CFPB, our industry's version of the referee, has basically pulled back more than 60 rules. These were meant to protect buyers from junk fees, poor service, and shady lending. They even dropped lawsuits against big lenders like Rocket Mortgage. What does that mean for your clients? It means fewer guardrails. And when people feel like the rules don't apply, they lose confidence. They hesitate, they delay, or worse, they walk away from the situation completely. So here's what to do. Be that steady voice. Educate your clients. Explain how you choose your lender, your title officers, your insurance partners. Let them know an intro from you means they're in really good hands, because in a market with fewer protections, trust becomes your superpower. Okay. You know how we usually ask for a review after a deal closes? Here's something better. I call it a preview review. So tell your client the review you hope to earn from them on day one. I started doing this on my kickoff calls, and right before I finish, I'll say something like, hey, I want to be really intentional about how we work together. Here's the review I hope to earn from you. Brady and his team were responsive, explained things clearly, and helped make the process less stressful than we imagined it would be. That's the standard I'm aiming for. If I ever fall short, tell me and I'll fix it. Okay? So what happens next? Clients know exactly what great service looks like. They feel empowered. And when you deliver, the review writes itself. Try this on your next listing or buyer consultation. Preview the review. It sets the tone and it makes earning trust that much easier. Finally, rates have ticked up a bit this week. Although inflation numbers are looking better, that signing of the trade deal or interim trade deal between the US and China really hurt the bond market, and therefore it hurt mortgage rates. Also, many investors worry that the lower inflation numbers that we're seeing right now could be kind of fool's gold, in that they largely don't account for the changes that have occurred since Trump's Liberation Day tariff tax hike. So right now, average 30-year fixed rates are right around 7%. That's nationally. That's up about an eighth or a quarter just in the last week or so. So we'll see what happens. But for right now, keep tuning in. All right? Y'all got this.